Hey everyone, welcome to the Guiding You Forward podcast presented by Mountain America Credit Union, where we talk about all things financial related. And today we're talking about construction loans. And thankfully we have Kim with us. Hi, Kim.
Hello.
We are so excited to have you with us today. Tell us, Kim, what you do for Mountain America.
I am a mortgage sales manager for Mountain America and manage loan officers and loan coordinators.
Perfect. So basically what Kim just said is she knows everything we need to know about construction loans.
That changes by the second.
So tell us, Kim, just right off the bat, what on earth is a construction loan?
Okay. So if a member reaches out to us and they inquire about building a new home, then we start to talk to them. Are you in the need of a construction loan, or will you be getting the loan at the end when the home is done?
Okay.
Quite often, borrowers are finding that they need the money to be dispersed to the builder, to the supplier, subcontractors throughout the construction period, and that's why they have us get involved. And we have a program that's called a one-time close.
Okay.
So they don't have to pay closing costs twice. They pay closing cost one time on their construction loan. And then that loan, once the house is finished, it rolls to a permanent mortgage. So if they're getting a 30-year fixed, that's what it turns into once the house is complete.
Okay, so I don't have to have a construction loan that's separate from my mortgage loan.
That's right.
Okay, good. Because separate fees, none of us want that, right?
Right.
Okay, awesome. So when it comes to a construction loan, obviously we're talking about the materials needed to build the home, right? Concrete, lumber. I mean, I wish I knew all the different things, but what about the land that it's on?
Okay, good question. So some members contact us and they already have the land. So if they already own the land, we're going to get an appraisal done on the land and then the cost to build to see what the value of the land is. And that's their equity. So that could be their down payment depending on what the value of the land is.
Okay, awesome.
If they don't already own the land, they can either find land with their builder. Perhaps the builder already has land picked out, or our member would pick out land and then select a builder as well for the construction.
Okay. And then is there an appraisal needed on that too?
Yes.
Okay.
So we have rising construction cost, right? So the cost to build, when we look at the cost breakdown with all of the different line items, and when we're looking at that cost breakdown, we're just making sure everything is included, labor, materials. So we take the cost breakdown plus the lot, to come up with a total purchase price. So let's say the cost breakdown was $400,000 and then the land is valued at $100,000.
Okay.
So you have a total of $500,000. So we order an appraisal and we provide the plans, the cost breakdown, the lot information to the appraiser or the appraisal management company. And then they look for comparables in the neighborhood to make sure that that house is worth the $500,000 that we have estimated.
Okay, awesome. So that's how that process works. That's perfect. So similar to getting an appraisal on your existing property.
Exactly.
Right? They're going through and looking at those comps in your area. Okay, very, very cool. So when it comes to utilizing or building my home, do I have to use a general contractor? Can I be my own contractor? What does that look like?
We do allow owner builders. So yes, you can be your own contractor.
Okay, interesting. Are there any other requirements if I'm my own contractor that way that I need to be aware of?
Yes, you will have to get bids. So we'll need to confirm exactly what the costs are associated with the cost of the home. And we require 10% down on an owner builder.
Okay. And is it different if I have a general contractor?
Yes, that's 5% down.
That is the 5%. Okay.
If you have a 700 credit score. So
there's even more requirements. Okay. So as far as those requirements go, you mentioned credit score. What are we looking at in that, as far as requirements besides that?
Okay. So again, contractor, 5% down. Requires a 700 credit score. 10% down requires a 660 credit score. And if you have 3 credit scores, that's your middle credit score we're going by.
Okay. What do you mean by 3 credit scores? What are you talking about?
So we order your credit report that brings back 3 credit scores from TransUnion, Equifax, and Experian.
Okay.
So if your credit scores were 790, an 800, and an 810, We're going to go with the middle, which would be your 800 credit score for qualifying purposes.
Okay. All right. So we're going to use that middle score, and it just needs to be at that certain threshold.
Yes.
Okay. Interesting.
And the loan officer can help educate borrowers on how to increase their credit score.
Okay. Perfect. So if my score is lower than I'm wanting it to be and I don't qualify, there's options for me still.
We can certainly look at them, yes.
Okay. Awesome. So let's say that I've got my construction loan. Are those payments being made to the builder? Am I making them? How does this all work?
Okay.
This is so confusing.
Let's use that example of a total purchase price of $500,000, a land of $100,000.
Okay.
So a total of $500,000. If the borrower is going to put 5% down, that's $25,000. So if Mountain America does a loan for $475,000, we have to pay that land to the seller, the cost of the land to the seller at closing.
Okay.
So we've now dispersed $100,000 of your $475,000 construction loan.
Okay.
So you start paying interest on that $100,000 immediately.
Okay.
So at closing, you will get a bill on the 15th of the following month for the interest on the $100,000 only.
Okay.
Now, as construction continues, whether you're on a 12-month or an 18-month construction loan, it's going to depend on how much we're paying out each month to the subs and suppliers, and based on how much work is done, that's going to go up each month. So where it starts out on $100,000, by your time you're in month 11, we may have the full $470,000 dispersed, and you're paying interest on that full amount by then.
Okay, interesting. So as that construction process goes, my payment is increasing.
That's correct.
Okay. Well, Kim, thank you so much for all of the information on construction loans.
You are welcome.
Yeah, we sure appreciate you. And thanks to all of you for tuning in. And be sure to like and subscribe so that we can see you on the next episode of Guiding You Forward.